You know that I hosted a real estate panel here at Milken yesterday. Tragically, you weren't on it.
It's good not to be there.
I'm going to begin by asking you the same question I asked my panelists yesterday. If you look around the globe, what are the most overpriced real estate markets today?
You know, probably the only thing in the last couple of years that we found that was, I don't know if I'd say overpriced, but it was more than fairly priced, was developed economy, highly let long buildings which had not a lot of operational intensity to get extra cash flows out of. So generally we've been selling those type of assets on the margin. And just because they're more like long bonds.
So the panel said Class A coastal office towers in the United States and New York luxury real estate were two of the most overpriced markets. Would
yeah,
you agree?
well, the first one fits in exactly what I said.
Yes.
You know, the second one is just it's an obscure business. It's a very small amount of apartments that everyone likes to focus on. So I wouldn't call that a real asset class for commercial owners. These are individuals buying expensive apartments.
What about Hong Kong?
You know, when I say they were talking about the U.S., but when I just say globally, anything long let with cash flows on it has been expensive because it looks like a treasury bond, a 30-year treasury bond. So we've been worried that interest rates will go up a little bit, and therefore you shouldn't own a treasury bond. And therefore, those are the types of things that we've been net sellers of for the past
what people like
3-4 years.
What falls into the core real estate bucket?
Not exactly
always?
Core, not always. The fact is, if something has really long-term, like our business is about operational rework of assets. We usually buy something, strip it down, fix the lobby, rework the tenants, and whatever interest rates that go up would never be relevant because it's the work that we do that actually creates the value.
Sam Zell, never a man short for words, surprised the audience, I would say, and perhaps his fellow panelists by saying there's oversupply in almost every real estate market, particularly in the United States, but also elsewhere. He ticked off not just offices, but multifamily, warehousing, and the list goes on. He said he's not just selling, but he's sitting on cash because the day of reckoning is coming where those properties are going to clear at a much lower price. Do you share that point of view?
The market's a market because everyone has an opinion. So we'll leave Sam to his opinion.
You don't agree?
Look, I think there's always places where value can be found, and we have a very broad franchise. Sam doesn't, and therefore we can do a lot of things that he can't.
You've been a big fan of Brazil. Do you remain a big fan of Brazil?
Look, we put $12 billion of equity into Brazil over the last 24 months. Since that time, interest rates went from 14 to 6. If there's a reasonable political event in the end of this year, then I think Brazil's going to take off. And so I think we've done very well on what we've had, and we'll see. And the only thing is, it's hard for people to go there. We've been there a long time. Invested, been very global for a long time, and therefore it's just different for us versus a lot of others.
One of the factors driving real estate prices over the past decade has been the increase in global capital flows. How significant, Bruce, is the pullback or curtailment or decrease at the very least in capital flows out of China into real estate?
There's $35 trillion of institutional capital in the world. Compound that at 6%, the number keeps getting bigger and bigger. High net worth is probably larger than that, or savings of individuals. So we're talking almost $100 trillion of capital in the world to get put to work. There's no lack of capital. There are ebbs and flows, yes, on the margin. Chinese buyers generally were the high bid on most large assets for the last couple of years. You won't have those if Chinese capital isn't bidding, but
is Chinese capital no
the world
longer
always
bidding?
changed. The world always changed.
It's not just Ambang and HNA. There are other Chinese buyers too.
There's a lot of Asian capital in the markets, and it'll still be there.
Brookfield sold some assets to those Chinese buyers at some pretty attractive prices from a seller's point of view. Do you think you'll have an opportunity to buy some of them back, perhaps at lower prices?
Look, I would say the things we sold fit into the category, what I said up front, which is they're longer let buildings in coastal markets, and we probably wouldn't be buying them back at this point in time. We're value investors, and we have I guess we have a benefit of we're very global, so we can move our money around the world. Most people don't have that benefit.
Are there things in the H&A or M-Bank portfolio that might appeal to you, that might fit the characteristics of pieces of assets you do like?
Sure, and we'll have to see.
Yet to be determined.
Yet to be determined.
Bruce, it seems to me, I could be wrong here, but it seems to me that Brookfield is getting more ambitious, at the very least more creative with some of the deals that it has done as of late. I'm thinking of GGP, for example, effectively take private transaction you're doing to buy out the rest of that mall owner and operator, and also Westinghouse, a seemingly uncharacteristic deal for Brookfield. Am I right that those are slightly out of character, and that maybe because of valuations and because there's so much capital chasing opportunities these days, you need to be more ambitious, you need to be more creative?
I'd like to think we were always creative, Erik. But what I would say, look, I think some of the things are just larger today. You notice them. When we buy a $200 or $500 or $1 billion business, nobody notices it, and we don't put a lot of press releases out on those type of things sometimes. Those two transactions you mentioned just happen to be either larger or, in fact, in Westinghouse, it's a very brand name company.
Right, and one that people confuse, actually. They think you've got nuclear business.
Yeah, in fact, it's just a nuclear servicing business. Remember, what we're one of the larger renewable owners in the world. We deal with a lot of utility companies, and this company services utility companies. And our niche, or our ability to do it, was the fact that we understood probably more than most people on what the duration of those nuclear plants were going to last, because we understand the electricity markets in each place where those nuclear plants are. And so that's really the angle that we had. And but we continued to invest on a value basis, and there are not many people that A, understood what I just said about electricity, B, had $4.5 billion, and C, was able to buy them out of a bankruptcy. It's just more complicated.
You have started to tap the high net worth market for capital to invest. Blackstone, as you may know, has some big ambitions when it comes to tapping the so-called retail channel. How aggressive how important, let's put it this way, how important do you think it is to the alternative asset management industry to develop those new pools of investment capital?
Look, as I said earlier, there's an enormous amount of institutional capital growing, and you could just stick with that, but it's always good to diversify your sources of liquidity. And so the high net worth system are individuals, and it really goes back to technology. It was very difficult to figure out how to deal with individual investors without technology advancing to be able to deal with lots of individuals. And today that's now evolving, and we can now do that. So we probably will have longer term 10 to 20% in the high net worth systems of our funds.
Any other pools of capital that you plan to tap?
You know, we have four listed.
Among the most diversified.
We have four listed partnerships that trade on the New York Stock Exchange. Individual investors can buy them. They're perfect for 401ks or retirement accounts. And so that really is a high net worth product. Institutions can buy them too, but they're a very attractive thing. So longer term, there's a lot of capital out there for high net worth, and we have products to put into them.